So this is my first video on my own, and when I was talking to Phil, I thought it would be important for me to share with you from a sales standpoint some of the key aspects of when I'm speaking to these people to get them funded for a deal for a business loan, some of the things that I talk to with them about, and maybe shed some light as to how I handle it and what I've been coming across to share with you some key talking points about it. So, just like any good salesperson, you need to educate yourself about this product and also have an understanding as to who you're selling it to and what their needs are. That's just sales 101, as anybody might know. So typically, one of the things that you have to understand is that when you're calling these people and you're calling these leads, the first thing is they reached out to you because they need this loan. So that's the first key point. And typically, one of the things you need to understand is they might not necessarily qualify for a standard term loan at a big bank. Big banks, there's a lot of bureaucracy. They don't do a lot for lending these days. They're not really there to help the business owner who's there typically. You're also going to have to understand you're going to be dealing more with the smaller scale businesses, maybe the more of the mom and pops. They're going to be doing 10, 20,000 a month in sales. They're not going to be doing 100,000 in sales and things like that. So the mindset is a different business than the standard larger corporations. The other thing is with dealing with a bank, and again, these people typically aren't going to be able to qualify for a standard bank loan. The bank loans, there's a lot of paperwork involved. They take a really long time. There's a lot of levels to getting that approved and then funded. So that is something that for a business owner who absolutely needs the money, time is of the essence, and that's something that they don't have the luxury of. So keep in mind, they need the loan, they need the money, and the thing is they may not necessarily qualify for a standard loan, and they don't have the time to wait. And that's a real key important thing. These loans are short-term financing or short-term funding. So they're typically 6 months to 12 months. They're drawn out directly from the business owner's bank account on a daily basis, but not considering weekends or holidays. So that's something that's important. They're usually funded within 24 to 48 hours. And they typically fund only at 1 month's sales. So if they're making 10,000 a month, 20,000 a month, that's typical of what they might get funded for. They do kind of understand when they go through this process that it will be a higher rate than a standard business loan for a bank, but keep in mind, they don't qualify for a bank loan. Maybe their credit isn't that great, it's subpar. So they're not going to be able to get a bank loan at 4 to 6% for a year or 2 years. A lot of those loans don't even exist. But for our people that are reaching out to us, that's something they wouldn't even qualify for. So once we educate them about that, typically what I do is I talk to them. So one of the stories I'll share with you is I was on the phone with a business owner, and they were talking about what their needs were. And essentially they were looking at a $20,000 loan. And they really needed it. They needed to finance. It was a clothing company, so I think they were looking to have their receivables for their upcoming season. So they had to invest in inventory, but they had to make a quick decision, and their vendors and suppliers needed the money to be paid up front so they could stock their showroom and so forth. So when I spoke to the owner, I said, well, what are you using it for? And she told me that. And I said, okay. And I told her what the amount on that would cost her, and it was about a $20,000 loan. It was about an $8,000 payback, so a $28,000 total, and she was really difficult in understanding what it was. But then when I started explaining to her that she'll be able to have it within 24 to 48 hours, all I need is the bank statements, credit card statements, and that would be withdrawn on a daily basis, and I'm talking about merchant cash advance loan here. She kind of understood because she was looking at making probably about 40% margin on that anyhow. So for her, she understood that while I'm paying a little more here up front, I'm going to make that back, and I'll be able to pay it off in 6 months. And by then, I'll already have profited more so than the loan ever would cost me, and I wouldn't even be able to get my inventory if I don't go through with this loan. So when we talked that way, she understood, and I was able to get the app going for her. And I also said to her, listen, if this works for you, 6 months from now when you pay that off, if you need the money again, we could look at it and maybe see about working with you on a better interest rate. And that's what typically happens. Once we have a history of a person that's taking these loans, or a business that's taking these loans, and a payback history, we're able to give them a better interest rate on the next loan. And then we build that relationship, and hopefully we're able to help them succeed in growing their business to the point that maybe they don't need these kind of loans anymore. But if they do, we'll be there to help them and work with them and continue to help grow their business. So I just want to give you a little insight about the business owner perspective and what we do when we talk to them, so that we're able to help them get the funding that they need, and then that helps us make the commission on those loans. Thanks for listening, and I hope this helps somebody.